Thank you for joining us this Friday the 12th of August. I'm Sophia, a market analyst with Bell Direct, and this is a weekly market update. Well, there's been a lot of noise around inflation right now and uncertainty in global markets. So let's take a step back and consider a trade-off between living with inflation or pulling back economic growth. With the current rate hikes, equities will suffer if rising rates trigger a downturn in growth. And on the other hand, if policymakers were to tolerate more inflation, we'd see bond prices fall. So where should we be putting our money? Well, investors should prioritise building a diversified portfolio, limiting exposures to any single risk. Combining defensive stocks and ETFs is a great foundation for a long-term plan, now that we're seeing higher prices feed through to margin pressures in most sectors. As well as rising inflation this year, we've also seen rising bond yields and falling bond prices. And the risk to bond investors is that central banks raise rates faster than what's been priced in. So investors can mitigate this risk by, again, taking a long-term view on bonds in their portfolios. Additionally, since April 2021, unhedged equities have outperformed hedged equities due to the falling Aussie dollar. So investors may consider a higher allocation to unhedged global equities if they feel the Aussie dollar will continue to fall. Moving on to reporting season, 27 companies have reported so far. 33% of companies beat expectations, while 37% of companies reported in line with expectations. Next week is a big week with over 90 companies set to publish their earnings. Our local market has advanced 0.79% Monday to Thursday, with materials and energy in the lead. Meanwhile, tech and consumer staples have declined the most. In the ASX 200, lithium shares have soared higher, with Lake Resources, LKE, in the lead, gaining an impressive 71.5% this week. Now, there's been a lot of attention around reducing carbon emissions, and this is where lithium comes into focus, as it's an important component for rechargeable batteries found in electric vehicles. A major catalyst is the Inflation Reduction Act, which was approved by the US Senate earlier this week. The bill has provisions of $390 billion to combat climate change, where EVs are of particular interest. Now, given the EV sale projections, the current speed of mining lithium isn't meeting demand. And this may cause a material supply deficit in the future and prices for lithium raw materials to increase. Now, also in the ASX 200, Oz Minerals, OZL, advanced more than 35% after rejecting BHP's takeover proposal on Monday morning, while stocks that declined the most were St Barbara, SBM, and Computershare, CPU. And in the Ore Lords, Zataya, CTT, and Sayona Mining, SYA, followed LKE as the best performers, while the worst performer was Medical Developments International, MVP. And the most traded stocks by Bell Direct clients were Lake Resources, LKE, Aurora, ORA, Zip, ZIP, Pilbara Minerals, PLS, Whitehaven Coal, WHC, and Liontown Resources, LTR. Clients also bought into BHP, Sayona Mining, SYA, and Fortescue Metals, FMG, while took profits from Telstra, TLS. And the most traded ETFs this week were the BetaShares Australian Strong Bear Hedge Fund, BBOZ, the iShares China Large Cap ETF, IZZ, and the BetaShares Geared Australian Equity Hedge Fund, GEAR. And lastly, economic data to look out for next week. Well, on Tuesday, we'll receive the minutes from the RBA's August meeting when the cash rate was raised to 1.85%. And on Thursday, July's unemployment rate will be released. Unemployment fell to a fresh record low in June of 3.5% and is forecast to rise to 3.6%. And that's all we have time for today. I'm Sophia with Bell Direct. Have a great Friday and enjoy your weekend.